I am diving into the top 44 home buyer mistakes that I commonly see over my 24-year real estate career, helping over 8,000 families buy and sell real estate here in Metro Detroit. So you're going to want to save this video for when you're ready to make a move and avoid as many as you can. Or if you're working with a Perna Team agent, we actually take care of most of these things for you. I'll let you know which ones we do and which ones we don't. Or we educate and inform and make you knowledgeable about the rest of them, which are the ones that you have to take on as a home buyer. If this is your first time here, my name is Mike Perna. I've been in the real estate business here in Southeast Michigan for 24 years, helping thousands of people just like you. I've included a link below to my calendar so you can book a time with me to talk about your next move anywhere in and around Metro Detroit. In addition, if you're looking to move somewhere nationwide, please reach out because we have vetted partners across the US that, again, they will take care of most of, if not all of these 44 things for you, or at least teach you and make you knowledgeable about them. When it comes to buying a home, it is a monumental task that requires careful planning and research and attention to detail, and one small mistake, and I've seen this happen quite a bit, can lead to tens of thousands of dollars in losses, buyer's remorse, or just a whole heck of a lot of stress that you just don't need to undergo. In fact, studies by the Wall Street Journal and the New York Times have shown that 60 to 80% of buyers have buyer's remorse. Let's see if we can avoid that. So we're gonna get right to the meat of it and dive straight into the 44 mistakes that I see time and time again. Number one, skipping the mortgage pre-approval before going to see homes. Now this one's kind of a rookie mistake that can cost thousands of dollars in the long run. Because if you find the right home and you love it and you gotta move quick to get pre-approved and knock down a mortgage to make the offer, it limits the time that you have available to shop for the best rate and the best cost and the best loan product for you. I see this one time and time again. When we start working with our buyer clients, we do get them over to a couple of different mortgage options, even before we see the first home, to make sure you've got the right product, the best rate, and the best costs. Number two, not researching the neighborhood. And I see a lot of buyers whose first and last time until they move into their home in a neighborhood is the 30 minutes during the showing. They don't even see the neighborhood really. Take the time to drive that neighborhood during the inspection time frame at different points in the day or over the weekend to get a better feel for the character of it. This is something that we educate and inform our buyers on, and we remind you as soon as we get an accepted offer. Number three, skipping the home inspection. An inspection report can reveal major issues with the property that could cost you a small fortune in repairs. Don't ignore the red flags like horizontal cracks in the basement walls, signs of past water in the ceilings. Get a good inspector out there to fully check these out. We work with some fantastic inspection partners that actually inspect my own homes, right? I hired these guys and that's how I know that they're very good. Number four, not budgeting for closing costs. So closing costs can add up quickly, so make sure you factor them into your overall budget. A lot of buyers have their down payment ready, but they don't think about things like filling up your tax escrow account at closing, mortgage closing costs, filing fees at the county. I advise people to budget between 2 and 3% of the purchase price for closing costs on top of the down payment. And we'll remind you of that during our buyer consult. Number five, falling in love with staging. Falling in love with staging. Staging is designed to make a property look appealing, but it's not always reflective of a property's true condition. I literally just showed a home that a professional stager did a makeover on, and while the rented furniture, the place settings, the decoration all look great, it leaves before the closing. What would have been left behind is the 90s Formica and outdated bathroom tile, and the stager did use a rug to make it look better, but I always want to remind my buyers that, okay, don't fall in love with the furniture. Yeah, cool, the setup is cool, but all the decor items do leave, so you want to make sure you pay more attention to the more permanent items, cabinets, countertops, the actual look of the fixtures of the home themselves. Number six, not considering resale value. You might love a property that has some very unique features, but will those features appeal to a wide range of potential buyers when it's time for you to resell that property? A number of years ago, I was hired by a seller that had a tennis court take up his whole yard. It was really cool looking, but it's also super specific. This guy did actually really love tennis. I want to say he was on the national team, our national team for the Olympics, if my memory serves. But after 8 weeks on the market, he did take my initial advice at the listing appointment and had the concrete court removed and sodded over the yard. It cost about $20,000 to do this, but when we put the home back on the market a month later, we put it up $50,000 higher, and we immediately had 6 offers and sold it even further above that. So that's something that we will do, is advise, hey, this home has a unique feature that is super specific. It may limit your buyers in the future. So I want to avoid that potential pitfall. If it's something you love, get after it. If you're okay with a limited buyer pool in the future, get after it. But I at least want to make you aware of it. Number 7, failing to read the reviews and doing your research on real estate agents. So this is a big one. Your agent can make or break your home buying experience. So I advise you do your research and choose wisely. I even go so far as to look up reviews for agents that I'm about to work with who have submitted offers on our properties. Google is the gold standard for reviews. Here are ours. We're on approach to 3,000 5-star reviews, more than anyone else in the state of Michigan, and I'm super proud of my team, and this is Google screened. Google screened is an extra layer. It means Google has done an actual Pinkerton background security check and financial fraud check. They won't certify someone with a criminal history or someone that's committed financial crime. Speaking of, if you're getting value from the info that I'm putting out there, subscribe to the channel. We put out content every single week, and please give this video a boop on the like button so more people can see it. I'm grateful and thank you. Number 8, not getting everything in writing. I know agents will say from time to time, it's okay, the seller said they were gonna leave this or do that or fix this. Verbal agreements, my friends, are not worth the paper they're written on because they're not written on paper at all. See what I did there? I'm funny. So make sure, I have a terrible sense of humor, by the way. His dad jokes all day long. Make sure that every agreement is done in writing and signed off by all parties involved, anybody affiliated with the transaction. Number 9, not factoring in all the costs. And I mean, there are a lot of costs. I see a lot of buyers look at the pre-approval that will have the monthly payment on it, but it will only have the principal and the interest. Ask before writing the offer what the yearly taxes are, and don't forget homeowners insurance. And it's always good to call and get a heads up as to what the homeowners insurance rates are going to be, because it changes a lot zip code to zip code. I've got a great insurance broker that can give a rough estimate on any zip code or any city based on the price range anywhere in the nation. And when my buyers start looking, I actually have them do a little bit of research, my insurance broker do a little bit of research, so that we know even before we go see homes, what those anticipated insurance costs are going to be, because that is a factor, especially if it's in a floodplain. In addition to that, most homes today are in associations, and all condos are in associations. So that's an additional yearly or monthly fee. And of course, there's the quiet cost. Very few people tend to consider, and that's the maintenance cost. That roof is gonna come due someday. So my rule of thumb is to budget about 1% of the cost of the home towards short and long-term costs like roofs, windows, HVAC, the occasional plumbing and electrical issue. So if the home is $450,000, that's about $4,500 per year or $90,000 over a 20-year period. There are many hidden costs associated with home ownership that can just blow your budget if you're not prepared. So our guys will do the tax research and the insurance research for you as you start to look at homes in specific areas to be sure you are fully informed before you even step foot in a home. Number 10, waiting too long to start the process, so then you gotta rush into a purchase that you may or may not be happy with. If you're in a lease that's not month to month, or there's a life event happening like a baby on the way, a move for a job, everything in life and real estate takes a lot longer than it seems. Here's how I advise budgeting your time, and here's how I budget my time when I'm making a move. I do it in reverse, and I actually call it the reverse timeline. So if I've got to give up the keys on my apartment, or wherever I'm staying on June 1st, I know whatever I buy, I will probably want to paint, maybe carpet, refinish the hardwood floors, make some changes before all the furniture is in because it's so much easier to do it then. That takes about 10 days or so to allow for contractors to get in there and make those changes. And contractors right now, a lot of them take longer than promised. A lot of contractors are gonna promise 5 days, so I would budget 10. 5 days for movers, especially on cross-country moves where a lot of moving companies will give a range of 2 to 4 days that your stuff will get there. So that means I need my keys by May 15th in this case. Most sellers need the cash from the closing of this home to close on the next one, and then they need time to move. Typically, that's 30 to 60 days in this market. If I need them out sooner, guess what? That's gonna cost me more money. I either have to offer more to make it worth their time rushing or make a double move, or more often, I'm just gonna lose the house because another offer, another buyer did plan properly and can give them more time. Even if the offer is a couple $1,000s lower, if it doesn't cause the seller to make a double move, they're gonna take that one. So let's call that 45 days. So that brings me from May 15th to get the keys to a hard close date of April 1st. Now it takes 20 to 45 days to get a mortgage depending on what type of mortgage, the appraisal, and the underwriting process. So let's say that takes 30 days. So I need to find a home and have it under contract no later than March 1st. And with a lower inventory market, I want to start looking a month or 2 months in advance of that date. As an agent, I can drag out the closing. I could drag it out like for an extra 20 or 30 days. I could drag it out a bit. So if we find you something fast, that's amazing. But if we start too late, it's really difficult to push up a closing or have a seller move faster. So we want to get out and looking and pre-approved no later than January 15th. Yep, to avoid stress and allow for time, especially if we run into inspection issues on the first home and then got to go find a second home, I want to start you out looking way the heck back in January to affect a July 1st turning over the keys on your current property or current lease. Number 11, take your time. Do your research and don't let emotions cloud your judgment. This is perhaps the most critical mistake to avoid, and it can lead to a lifetime of financial regret. In fact, rushing into a purchase is so critical, it's worth exploring in a lot more detail. Number 12, buying for today only. So people used to move on average every 7 years. Now it's 13.9 years and climbing. Part of that is because the cost of buying, because the home prices have gone up so substantially, it's prohibitive to move multiple times. And also interest rates have risen so much in the last couple of years. So this is making a lot of people put off the next move for close to a decade. When you're looking for your next home, don't think in terms of, will this home work for me for the next 5 to 7 years? Think further out to 12 to 15 years. What life changes could happen or will happen? Will I have kids? Will I have more kids? Will I have less kids, being an empty nester soon? Buying and selling is expensive, and the less often you have to do it, the better. Number 13, overlooking resale potential. I talked about this in another video, but to paraphrase, don't buy a home that backs or fronts to railroad tracks. The homes with the largest addition in the neighborhood or the one that's over improved, AKA like somebody put a $75,000 kitchen into a $200,000 house and paying above market to get that kitchen in that home. In the first two cases, you're better off paying a little more and either not backing up the tracks or fronting the tracks or moving to the next up expensive neighborhood and getting a middle of the road home there. On the kitchen or over improvement situation, an appraisal will bring the value back in line. Make sure there's a clause in there. My contracts have this. Even if you're paying cash, and my contracts have that you won't pay more than appraised value, or at least be able to negotiate or walk away from the deal if the appraisal comes in significantly less than what you're willing to pay for it. Number 14, overlooking government loan programs. And we do explore these with our clients because there are some really good ones out there. FHA right now, for example, has almost a ½ point lower interest rate than conventional loans, and it goes back and forth. VA is still the best loan program out there, hands down, because it's assumable. As an example, we've got a seller right now that has a VA loan at 3.25%, and right now with rates above 6%, closer to 7%, that's a value in and of itself for a buyer. His home is more affordable to buyers than the same priced home next door because that buyer can take that 3.25% as opposed to having to go get a 6.5 or a 7, which means that somebody that's approved for, let's say, $50,000 less could actually afford this home. Rural development loans or USDA loans, if you're buying in a qualified zip code, have 0 down payment requirements with no PMI. And of course, here in Michigan, we've got the MISHDA state grant for first-time home buyers. And a lot of states have this. If you're not in Michigan, check with your loan officer and local real estate agent to see what your state does offer. Number 15, loans with prepayment penalties. And we educate our buyers about this actively. If this was 2021 and you were locking at a rate at like 2.5%, no issues there. A 1, 2, or 3 year prepayment penalty to get another quarter point shaved off the rate, I'm in on that. And a lot of my clients did that. Today, that is no dice. Rates are high right now, but they will be coming down. And you'll want to refi before that prepayment penalty timeframe comes up. It sounds enticing. Why not have a 2% prepayment penalty to save $50 or so a month? Well, here's why. When rates come down, and they will, a full point or more, you're going to be saving a lot more than $50 a month. And on a $300K mortgage, let's just say, with a 2% prepayment penalty, you'd have to write a check for literally $6,000, $6,000 to take advantage of the lower interest rate. That is a bad idea, guys. That's a pass. That's a 0 out of 10, would not recommend. Number 16, underestimating repair and renovation costs. Guys, everything costs a lot. Owning several personal homes in the past and rental properties, I can tell you with experience, everything costs a lot more than we think it does when we're estimating repairs. I just had to replace 2 roofs this year on 2 different properties. And man, what I thought was going to be like an $18,000 job came in at $26,000. My parents just redid their kitchen, and with material costs and labor costs, the quotes from 3 years ago came in almost 50% higher from the same 4 companies. During the inspection period, we do have the opportunity to not only have an inspection, but get quotes done on things like kitchens or bathrooms or whatever that looks like. And I highly encourage our buyers, and we have several contractors that we recommend as well, to get in there to at least get a ballpark of what that could look like. So when we're standing in a home and a buyer says, I love the home, I love the layout, but that kitchen, the first call that I make is to a couple kitchen companies and say, hey, can you scoot out here, give me a couple estimates on this thing? because I want to make sure my buyer is fully informed and prepared with this home purchase. Number 17, waiving the inspection contingency to win a bidding war. There are going to be agents out there that say, go ahead and waive the inspection contingency. It should be fine. It'll be fine. It's going to be so good. It is not fine. It is not fine. Don't do it. Don't you do it. Now, if you want, you could do a pass-fail style inspection where the home either passes or fails by your standards, so the seller knows you're not going to ask for anything, but you still have an out. Or what I like to do is shorten up the inspection time frame from the usual 7 to 10 days to closer to 3 days. So if you determine that you don't want the home, they can move on and take a backup offer pretty rapidly. Or if there's an unexpected repair, you can negotiate that more rapidly. But giving away the inspection contingency, nope, that is not in the cards for my guys. Number 18, not checking a builder's reputation. Are you building a home? That's pretty awesome. I've done it in the past, love the process. We always assume that it's going to be perfect because it's brand new. But the problem is it's still built by humans and then later on inspected by humans. Before getting into contract with a builder, scope out their reviews. Look at the Better Business Bureau for complaints. We actually do this on behalf of our clients. We send them to them. If there are homes already built in the neighborhood, knock on a door or two and ask how the builder did. What were their cost overruns, time overruns, what did that look like? So I had a client a little while back building in South Lyon in a neighborhood that had 5 or 6 different builders in it, very large neighborhood. One of the buyers was at their home as it was being built, just taking a look around at the progress. So I walked over myself and I asked how it was going. They said miserable. Now this was a home that should have taken 5 to 7 months to build, and it was taking the builder 18 months, and it still looked like it was a few months out. Meanwhile, that buyer was making payments on the construction loan for the home and on their current home, both. Yeah, we ended up going with one of the other builders in the neighborhood, and it was a great experience. Number 19, overbuying. Don't stretch yourself all the way to the max, to the breaking point where a mortgage is taking up 36% plus of your income, unless you know you've got a raise or a promotion coming in the very near future. So my rule of thumb that I tell people is 28% of your income max should go towards housing costs of any kind, whether it's a house or an apartment or a rental, whatever that looks like. Does it put a damper on what you can afford today? Yeah, it does. Does it save you from being house poor and let you save for a rainy day? Yes, it also does that. So rainy days do actually happen. Furnaces go out, your dog needs surgery, all of the things. I want to make sure that you're not going broke and house poor, and then all of a sudden when there's some sort of a super emergency come up, it literally breaks your bank. Number 20, not researching zoning versus what you want to do with the property. I've got 2 examples for this one. Recently, we sold a building. It's an old post office, and the new buyer wanted to renovate and expand the building. Now, this building's on the Register of Historic Buildings, so no outside additions or expansions can be done. So they literally just spent $1.2 million on my seller's building that doesn't work for them. Another example, we sold a home where we represented the seller, not the buyer, on a home in a subdivision. They went to immediately build a second 2-car garage. Yeah, the association's lawyer was pretty quick to give them notice that that $45,000 garage they just built and cement that they just poured, it all had to come out and come down. No independent structures were allowed in that neighborhood. Now, I could have told the agent that represented that ahead of time if they had asked. I had no idea they wanted to build a garage. Last example, I sold a home, and again representing the seller, and got a call from the buyer myself a few months later. They had a company out to pour a concrete pad to the side of their house, a very expensive one because they were going to put an RV on it, and that's a lot of weight. They also went through the cost of adding a 220 line to the side of the house so they could park the RV there and charge it. Within the week, the association sent them the notice that the bylaw stated the RV could only be parked inside the neighborhood for a maximum of 48 hours and could not be stored long-term there. They asked me, why didn't I tell their agent that? Well, first, I didn't know that's what they specifically intended. I would have, because I would have done the right thing and told them. And second, I did give their agent a copy of the bylaws 30 days prior to closing to read and either accept or back out of the deal. Their agent, as it turns out, never passed it along to the buyer. Any specific needs or changes to the property, or even doing things like storing an RV, be sure to always ask the questions ahead of time and always get the answer in writing from a credible source like the association or municipality. And if it's something to do with the house being historic, that's going to be on the title work. These are all things that should be done during the inspection period and upfront. Number 21, ignoring the legal description and or title work. The legal description is what you are actually buying, what the property it is that you're actually buying. And so recently I got a call from the neighbor of a home that I sold. I sold a home to one of my buyers, and the neighbor gave me a call because that home, not the neighbor's home, but the home that I sold, had a 1-car driveway and my buyer was extending the one car into a 2-car driveway, so extending it away from the house. Here's the problem. The person next door believed that that was their property. So they were calling to complain to me and telling me that, hey, you got to call your client, tell them to stop. And I'm like, look, we did a survey. My guys own that property. They can do whatever they wish with it. And the township approved the driveway extension. As it turns out, this guy thought that he had owned that extra 8 feet for the past 15 years when he never did. The other problem is he had been maintaining that extra 8 feet for the last 15 years. The property he didn't own. So you always want to be sure you know exactly what you're buying through a survey, through the legal description, and through title work. Number 22, assuming the utilities are sufficient. And this one is especially important on homes that are over 100 years old. In fact, I did a video on the 5 types of homes I would not buy, and homes over 100 years old are on that video for this exact reason. In a lot of cases, some but not all of the plumbing or the electrical has been redone, which means you could have lead pipes and you could have old knob and tube wiring. And a lot of times with these historic homes, people are going to update what they see because updating plumbing and electrical behind walls, especially plaster, can be very expensive. Number 23, being sure you're actually in the school district that you want. And we do research for this for our clients. I had a client years ago sell a home in Troy, Michigan, and the buyer assumed that they were getting Troy schools. And they wanted their kids in that district because they had a special needs kid, and Troy had a specific program that was great for that child, which is fantastic. In fact, this home was located in the Warren Consolidated School District, not Troy schools. Oftentimes, school districts do not perfectly overlay or match up with city lines. As an example, part of Rochester Hills, Michigan goes to Auburn Hills Schools. Part of Novi, Michigan goes to Northville Schools, so on and so forth. Also part of Novi, Michigan goes to Walled Lake Schools. Go figure. So if schools are a factor, be sure that your agent calls the municipality to double check the district. Do not rely on the multiple listing service. That is super important. Number 24, not having a rainy day fund. A client of mine bought a home a while back and immediately, unexpectedly, the furnace just tanked. It went out. So it was around $2,000 to repair it or $6,000 to replace it. This young kid was in hot water. He had used every last dime he had just to get into this house. And I always advise people, if you're single, at the bare minimum, have $1,000 in your rainy day fund. Like if you don't have kids or anything to worry about, at least $1,000. Like, is it enough? No, but does it provide at least a little bit of peace of mind? Sure. And you can always throw it into something like Apple stock or something like that. Something you can get to reasonably quick. If it's a family, I don't know that I'd be comfortable with less than $5,000 in a rainy day fund. And with that, I'd probably put it into a high interest yielding account like an Ally Bank, where I'm making somewhere between 4 and 5.5%. So at least I'm making something on the money while it's sitting there, not in use. Number 25, failing to prioritize features. So here's the interesting thing out there. There is no 100% house. It doesn't exist. But you'll definitely find an 80% home or a 70% home or a 90% home that fits like 80% of your needs and wants. 100%, that's impossible. So when we sit down and we initiate our buyer consultation, one of the things we do is we take the time to write out our top 10 needs and wants list. And if you're married, have your partner do it as well, so both at the same time, and then prioritize it. Because the reality is, you're probably only going to get the top 3, 4, or 5 things on that priority list. You're not going to get all 10. And I want to make sure that if you have a partner or a husband or a wife, you guys are all on the same page. As an example, if you want a finished basement and 4 bedrooms and an acre lot, this is an actual real example, we just had a buyer that wanted just that, to get all of those things, they would need to push their budget up $50,000 to $100,000 outside of their affordability and especially their comfort. So to get the home that they wanted, they had to make a choice priority-wise to either have a 3-bedroom home in that city with the finished basement on the acre, buy a 4-bedroom home in that city without a finished basement on an acre, or change cities to a more affordable city to get the 4-bedroom home, finished basement, and an acre. But if you know early what the needs are versus the wants, you're gonna have a much easier time finding the perfect home, or at least a great home that you can both agree on and both fall in love with. So one thing that was actually on both their list but was pretty far down was a pool. So there was a home that came up without a finished basement, but it did have a pool. So they actually immediately crossed this one off the list because they valued the basement much higher than the pool. Number 26. Not negotiating inspection repairs. So this is actually pretty terrible advice I hear real estate agents give when larger repair items come up, and I train my agents very, very hard on negotiation because I want to make sure my buyers are represented to the best of and sellers represented to the best of our ability. So the first thing I tell my buyer clients when we're at a home inspection, and yes, we do attend all of our inspections, is we're on a bear hunt. And I'm not that worried about the chipmunks and the squirrels. Now to put that into a real example, downspout extensions. They cost a couple $100. Should you have them? Yes. They could be done anytime. Should you do them? Of course. Am I gonna bother a seller for $200 and risk losing you this house? I honestly wouldn't advise it. I'm talking about bigger ticket items like furnaces, windows, roof leaks, mold, radon. These types of things, a lot of buyers are receiving the advice from their agents not to negotiate during a hot market. But here's the reality. Once you tell a seller what that problem is, they have to disclose it to every other buyer out there. And when you're negotiating the purchase price of a home, home buyers that do not have an offer on the home yet will double the price of whatever the repair is that's needed and then lower their starting offer price by at least that much or more. So it's actually in the seller's best interest to work with the offer they have, not with the unknown X factor of the buyer that, for whatever reason, may not ask for that repair, but in reality, still wants that repair. Everyone wants more taken care of. Everyone wants the windows that are functional, that don't have leaks. Everybody wants the functional furnace. Of course they do. Don't be afraid to negotiate a portion or all of that repair cost, and don't be afraid to walk away from a home if a seller says no and you're getting smacked with an extra $20,000 to $50,000 in repairs that you weren't inspecting. Let me tell you a secret, my friends. There's always going to be another house out there. Number 27, skipping the final walkthrough. Now this one can be a deadly one, and I've got a real life example. So per the purchase agreement, or a good purchase agreement that an agent should be using, the seller has to maintain the property in the same condition as it was during the home inspection and during the showing. So if the furnace goes out and it's a $1,000 repair before closing, it's on the seller to make sure it's in fully functional and working order for that buyer. And we as a team insist on doing the final walkthrough, and I understand everybody's busy right now, and it seems like a very simple step in the process to skip. If a buyer wants to skip it, if you're my client and you tell me you want to skip it, that's fine. I'm not going to. I'm still going to actually go do the final walkthrough to make sure all the stuff was moved out, to make sure that it's broom clean, to make sure everything's in the same condition. So one of my very first real estate deals, I was representing a seller in Livonia, Michigan. It was in January, and 2 weeks before the closing, my seller turned the utilities off. Now I, to be clear, did not tell him to do that. Not at all, no way, not ever, as you can imagine. Now what happened was the pipes froze and burst, causing about $120,000 worth of damage. The buyer had skipped the final walkthrough, went right to the closing and bought the house. Now at the closing, when you sign, you're buying the home in the condition as it is at that moment, stating you're accepting whatever the current condition is. So the buyer, of course, went over to the house, found the damage, tried to sue the seller, and in that case, the case was thrown out. When the judge asked, did you have the opportunity to do a final walkthrough, aka could you have known about this damage and you made the choice not to know about this damage, their answer was yes. And the judge said, sorry, Mr. Buyer, that's on you, not the seller. Later, they went back and tried to sue their own agent because they didn't do the walkthrough, and the agent was able to show both text message and email telling them that they should be doing the final walkthrough. The buyer had replied back, they were just too busy at the time, let's skip it and go to the closing. Please guys, please do not be too busy to take an hour and a half before the closing and make sure this several $100,000 or above $1 million purchase is in the condition you're expecting it to be in. Number 28, not planning for moving expenses. Guys, moving has gotten a lot more expensive in multiple ways over the last couple of years. If you're hiring a mover, gas is more expensive, so they need to charge that back to you. Labor is more expensive, so they need to charge that back to you. Maintenance on the trucks is more expensive, so they need to charge that back to you. Now, even if you're renting a truck and doing the move yourself, I just got a little sticker shock because I rented a U-Haul a few weeks back from Home Depot, and that little box truck was about triple the price of what I was expecting, what I thought it was gonna be. And even if you're doing the do-it-yourself move with friends plan or the family plan, get them over there, expect expenses to be higher than initially expected on things like bubble wrap and boxes. These guys are much more expensive than they used to be. Number 29, buying the first home you see, even if it's the right home. So I tell my buyers, let's go see 3 or 4 more if it's the first home and they love it, specifically to lock it in that this is the right home. Most of the time, I'd say like 60 or 70% of the time, it's still the right home and that buyer feels better about that choice. And if they have to compete, they feel better about competing harder on either price or terms because they already know what else is out there. Now that said, 30 or 40% of the time, they actually see one of the other 3 or 4 homes that they like better, or at least features in that home that they're missing out on the other home they originally picked that are lacking, and they say, you know what, maybe that first one isn't the right one. Now the other 3 or 4 may not be the right one, but the first one maybe wasn't as good as I thought. There are some features that are more important that I do want. And if you go see the other 3 or 4, decide on one of the other homes, or decide that none of the homes actually fit after that, guys, that's okay. That's okay. The most important thing is you're finding the right property for you, not the first property for you. That said, if you indicate to your agent, hey, I want to write an offer on this property, even let's say you do write, and even let's say that it gets accepted. If you do see another home or 2 that you're curious about and you want to see it, I would say still go see it. Why not? It can't hurt. And if your agent says, no, I don't want to show it to you, find a different agent. Number 30, being unrealistic about DIY projects. So this one's a funny one because there are several homes that I sold and then 10 years later I went back because my buyer at the time, now seller, called me to come and resell them. And I get a lot of repeat and referral business. And thank you so much for everyone who's watching this, who has worked with me in the past for your faith and worked with me repeated times. I am super grateful. Thank you. Anyway, I find a lot of those projects that the buyers had talked about at the time of the showing, the inspection, and the closing, those DIY projects that they said that they could handle themselves, like refinishing hardwood floors or taking down a wall, are not done. Downspout extensions are definitely the big one. Everybody says they're gonna do them, 10 years later, they're not done. So I advise buyers, just know yourself, be honest with yourself. Is this within my skill set? Have I done a project like this before? Do I feel reasonably confident in my ability to do these projects? Or do I have friends or family members that have experience to help cut down the costs? Or do I need to be a little more realistic with myself and say, I may not be able to tackle this thing and I might have to hire it out, and then I want you to actually get some pricing and anticipate that budget change. Because I don't want you to get sticker shock and I want you to have the features in the home the way that you want it to be. I think the best example of that one, and I'm gonna use my own self in this, is I bought a house once that needed a new roof, and in my mind, because my dad was a master electrician, we've actually done roofs before and I've done things like that. I was like, you know what, I'm just gonna redo it myself because I know I could shave like 50% of the cost if I do it myself. The reality is, I was just far too busy. Like the market picked up, this was back in '09, the market picked up and all of a sudden I'm like, I'm out of time, I gotta hire a contractor. So the roof was about double the price of what I had expected. Just because of being busy and selling homes, and thank you again for everybody that uses me, I was electing to spend time servicing my clients versus servicing that roof. And I waited too long and a roof leak actually happened. Number 31, not using a great real estate agent. And I don't mean a good real estate agent, I mean a great real estate agent, and there is a world of difference between the two. A good real estate agent is gonna shuffle some papers around, get you in to see homes, and make sure boxes are checked like contingency boxes, right? A great real estate agent could stop you from buying the wrong home, negotiate better for you during the initial negotiation, and then later during the inspection, and if needed during the appraisal. They can get you into properties that are not on the market. Now, a lot of those great real estate agents are widely wanted by other real estate agents because they have a great relationship with them, they have a great reputation with them, which means that you could be the only offer on some of these homes that never actually go on the multiple listing service or Zillow. And most of this checklist should be a part of the service a great real estate agent offers, making sure that they're seeing around corners, like bringing up things like the cost of DIY projects or moving costs or zoning regulations or easements or clouds and title or restrictions on the property. All of those things you shouldn't have to worry about. A great real estate agent will worry about for you. First stop on the great real estate agent list is their reviews. Find and read their Google reviews. And I mean really read them. A lot of agents that have 30 to 50 reviews, most of these come from family or friends that had not actually used them to buy or sell a home. They're just family or friends and they were asked to write a great review. And it shows in how it's written. I personally would not use a real estate agent in any market with less than 500 reviews that show experience and shows repetitive good service. Personally, I have 3,000 5-star reviews. And if you haven't yet, subscribe to this channel. I sincerely thank you for that. Number 32, lack of privacy consideration. So this is an interesting one, and in a lot of ways, it's a trade-off. And here's what I mean. I see a lot of people that really want a home within walking distance to a downtown, like a downtown Rochester or a downtown Northville. Frankly, I would love to have a home like that, and I'm also a massive introvert. So the homes that are within walking distance of downtown, for the most part, have postage stamp size lots. You're gonna be right on top of your neighbors and they're gonna be right on top of you. So you've gotta be okay with that. And as much as I love a good downtown, I'm not. And I'd rather be further out with a larger piece of property and something that I can put a fence around, just my own personal opinion, but you've got to determine how important privacy is versus location to you. And in addition to that, I would prefer my home to back up to a woods or some sort of a natural barrier, which makes me feel a little more like I'm in my own personal sanctuary versus on top of someone else's backyard, where like they're grilling and I'm grilling and we're 30 feet apart and we're just staring at each other. That's torture for me. Number 33, moving out of fed up emotion. And I'm actually gonna hit this one twice in two different ways. And I think we've all had those moments where we wanna just throw in the towel, pack up the U-Haul, and move way the heck out into the country just not to be around people. I know I had that feeling before, and especially as roads and shopping centers are, like literally everything has just gotten busier over the last 20 years, not just here in Metro Detroit, but in a lot of metros. So I've had a lot of clients make the impulsive move to move from inner cities like a Farmington Hills, a Northville, a Canton, all the heck the way out to like Howell or Fowlerville. Or people move away from Royal Oak because they're just tired of the busyness, or Troy, all the way out to like Romeo or Armada. And those are just a couple of examples. The one thing you gotta be real careful of with this is your commute. So your commute to work time, if you're not work from home, and because I had this 20 to 30% of the time, the people that make that move call me back a year or two later and say, wow, how much I love the country, but it's taking so much time away from my family because the commute's gotten longer and longer and longer as traffic just keeps on getting worse and road construction keeps on getting worse, especially right now, 696. And if you know, you know. And so they say, Mike, I know you told us to really think about this decision, and I loved being in this new location, in this new house, but I need you to come out and sell this thing for me because I'm moving back, not all the way, but to a closer city. So maybe a Rochester instead of a Oakland Township, or a Romeo, or an Armada, or maybe a Brighton or a Milford or a South Lyon instead of a Howell or a Fowlerville. The thing you really got to remember is that each and every time you make a move, it costs tens of thousands of dollars. Not to mention, moving way further out, you're gonna have increased gas costs with your car, you're gonna have increased wear and tear on your car, and most importantly, that tripled up commute means you're taking time away from your family. Number 34, forgetting about lifestyle fit. This one dovetails kind of under the previous one, but it's a little bit different. I believe it's important to pay attention to what your lifestyle really is, and is it matching the area you're looking at. As an example, I live in Royal Oak and have for a long time. And part of the reason why I did this is because I'm a road biker and I ride a triathlon bike in Royal Oak, in Ferndale, and now Berkeley have a lot of bike lanes. And I feel a lot safer riding in those cities versus some of the other ones out there. So as I'm making my next move, and I'm getting ready to right now, I want to pay attention to that with my lifestyle. In addition to that, wherever I move, I don't want to be that far away from a gym. So I go to the gym 5 days a week, and it's very important to me and very important for my sanity, and my family knows it's very important for my sanity for them. I don't want to take more time away from my family, so I don't want the commute to the gym to be 30 minutes. I want it to be like 10. Right? Because if it's 30, that's an additional 40 minutes, 20 minutes each way that I'm taking away from family time. So think about the things that you do on a daily, weekly, or monthly basis, on a regular basis, and think about what it would look like and how it would feel if you doubled or tripled the commute to get to those things, wherever those things may be. And I would take the time to write down through the week everything I do and everything I enjoy, or everything that I want to enjoy, but maybe are just too far away from me right now, and then think to myself, does this match up with the city that I'm looking in? And if it doesn't, we may want to pick a different location or a different area. There's some great areas across Metro Detroit that are vibrant and very, very different. I'm sure we can find an area that matches your commute and your lifestyle. Number 35, and again with the commute, because it is literally that important. It is my number one complaint I get when I sell a buyer a home and I call them back to check in on them, see how everything is going. They're like, man, we love the home, but that commute, oh. This is especially important for people that are coming in from out of town or out of state, because on a map, Metro Detroit looks a little small, but as they say, it takes an hour to get from Metro Detroit to Metro Detroit. So I advise my clients when we're settling in on a city or even a neighborhood, maybe not have found the house yet, to take the time during the same times that you would be driving that commute to drive that commute. As an example, I recently went to Milford and I live in Royal Oak. Sunday at 2 o'clock, that was a 45-minute drive. Not bad. Now, if I worked at the Proving Grounds in Milford and had to make that drive at 8 in the morning and then again at 5:30 at night, that's a 90-minute drive each way, not the 45-minute Sunday commute. And when do people go see homes? At night and on the weekends, or over lunch break where there's not as much traffic. So if you're driving from lunch, you're not getting a realistic commute of what it will be or what you will experience. And I want to make sure you know up front exactly what that's going to look like. So take the time to make that drive at those times that you are going to be making that drive to be sure that that commute time is a fit for you and your family. Number 36, and man, oh man, this is a big one, is not maximizing your credit score. So this is something almost no one does. Between 6 and 9 months before purchasing a home, get full copies of your credit reports to review. And it's a really easy thing to do. You could do it right on the Experian, Equifax, or TransUnion websites. Now, you're entitled to one free report from each of them every year. And first, take a look at the score. And as you can imagine, the higher the score, the better the interest rate and the lower the cost of the loan. What a lot of people don't know is that credit scores fluctuate quite a bit based on a couple of different things. Of course, making payments on time is the biggest one. The second biggest is keeping credit card debt below 50% of the card limit, ideally below 20% of their limit on the card. Another factor is how many times your credit report has been run, but there's also very commonly mistakes on credit reports that we find, like things that don't belong in your credit report or things that we can get rid of, and it's a factor of your credit score. So I want to make sure that we've got ample time to get rid of any mistakes that are lowering your score. And that way we can get the score as high as possible, high as humanly possible before applying for a mortgage. In fact, I'm a walking, talking example of this, but in reverse. It actually worked out in my favor. So there's another Michael Perna that lived in Novi at the same time that I did. We actually go to the same dentist, come to find out, but he's 20 years older than I am. And at the time that we both lived in the same city, somehow 2 of his credit cards that he had had for over 10 years got attached to my credit report. It was recording to my credit score. So at like 20 years old, it looked like I had credit cards starting out at 10 years old. And honestly, it gave my score a boost to over 750. So I just kind of like left them there until I had established better credit and more credit for myself with length of time and more credit cards. So when I went for the mortgage pre-approval, I of course got a better interest rate because of the other Michael Perna. So if you're watching this video, thank you. I appreciate it. And I'm so sorry I kind of, piggybacked on your credit for a little bit. I didn't use your credit. I mean, there was no change to your credit, but thank you for the score boost, my guy. I really appreciate it. So way more often, there are things on there that shouldn't be on there. And with a couple of months, I can usually get a lot of that stuff off. Using companies like Lexington Law, which is a very inexpensive law firm that will challenge anything negative or anything incorrect on your credit report, we can usually get them off a month or so ahead of applying for the mortgage, which is going to give you a 50 to 100 point boost, which is going to again give you a better interest rate and better closing costs. Number 37, failing to check insurance claims. So every year, owners of a property are allowed to ask for 1 free clue report from their insurance company. Now, a clue report on a home will contain every claim that's ever been made on that home. So when I'm representing a buyer, I make that actually part of the offer that the seller requests, and then we have time to review a clue report. And it's easy to get, it only takes a few days. Because there might be claims on there that were filed on the home that even the current owner doesn't know about. A lot of people do not ask for this because it's happened previous to them buying it, and to get it, it's got to be the current owner or the current insurance policy holder. And it's really interesting. I've seen all kinds of things on these reports, from kitchen fires to break-ins to trees falling on roofs to mold claims. It's really all over the map, and I would highly recommend getting one, especially as it's free for the owner to get and give to you. Number 38, not checking what the new property taxes will be, only going off the current taxes. So here in Michigan and in many states, you've got the state equalized value and then you've got the taxable value. So the state equalized value is usually about 50% of what the state feels your home is worth using recent sales in the neighborhood, and it's updated yearly. As you can imagine, this number's been going up significantly in the past 5 years. The taxable value is what you're actually being taxed on. So here's the problem. When you're looking at Zillow or the multiple listing service, it's only showing what the current owner is paying in taxes, not what the next owner is paying. So what happens when there's a deed transfer? The taxable value goes up to the state equalized value. Up until that point, it was only raising at the rate of inflation. Now let me ask you, home prices have gone up more or inflation has gone up more in the past 5 years? Home prices, they've gone up almost 60%. So between 2019 and now, home values have gone up almost 60%, and most of the homes that you're looking at were purchased pre-2019. So the owner is paying the lower $4,000, $5,000, or $6,000 per year in property taxes, but once that deed transfers, those taxes could easily double from $4,000 to $8,000 or $5,000 to $10,000. I want to make sure my clients have that information up front, so we actually contact the municipality to find out what the taxes will be once the deed transfers for the next owners before we make an offer, so you know exactly what that monthly payment's going to be. There's nothing worse than getting a letter in the mail saying that your monthly payment just went up $500 a month unexpectedly. Like, that's terrible. A terrible letter to get, and people get it all the time. And what's even more dangerous with this one is, like, if you ignored me and you ignored Mike and said, you know what, I'm not gonna limit my housing cost to 28% of my income, I'm really gonna push the envelope and go all the way up to 38% of my income, and then you get another $500 bump on top of that, so now you're in the 40s of pre-tax income, that could be some pretty hot water for some people. I've had some people that have called me back and said, hey, look, my agent didn't do a great job on this one thing. I don't trust him anymore. Can you seem to be a reasonable agent, can you come out and sell this home because I just can't afford it? 6 months after buying it, and that sucks. Number 39, overlooking specialty inspections. Home inspectors typically provide a very comprehensive home inspection, but it doesn't include all or certain things, most specifically testing for radon or for pests or for mold. In addition, most of them don't include sewer scope. And those are just a few of the specialty inspections. So I always like to look at an area and say, what issues are predominant in that area? And then say to my buyer, okay, Mr. and Mrs. Buyer, in addition to the standard inspection, because we're in this area and these kinds of things happen, I recommend paying a little more for these extra couple of inspections. As an example, there are certain parts of Michigan, certain parts of Metro Detroit, where radon comes in high, right? I always recommend a radon inspection in areas where they routinely come in above the EPA recommended level. So that's 4 parts per million, and it's common here in Southeast Michigan to see levels come in as high as 7, 8, 9, or even up to 30, right? And I know my friends on the East Coast are chuckling a little bit watching this video because they see radon on the regular as high as 200, 300, or 400 parts per million. That's literally 100 times the recommended level. In Michigan, because it's typically a lot lower, the fix is also a lot less expensive. But it's something that should be done, either negotiated into the sale for the current owner to do or done by yourself. Because don't forget, radon is a carcinogen. It's a cancer-causing agent. It's odorless and tasteless. You don't even know it's there. And it's just one type of extra inspection. A sewer scope is very important as an example because in more mature areas of Michigan, that would be like a Royal Oak or a Berkeley or a Livonia, a lot of those homes have two predominant issues with their sewers. The first one is a lot of them have older sewers that have started collapsing or simply just got gunked up. That's problem number one. Another problem, or a larger problem I see, is tree roots growing into the sewer line, which eventually cause backups, and if you catch it early enough, you can roto-rooter out the sewers from time to time every couple of years to maintain them and limp them along. But one of my sellers in Berkeley that's about to go live on the market here in the near future did disclose that they had their sewer line replaced. I was curious, so I asked them just out of curiosity, what was the cost of that and how much did the city actually help defray that cost? How much did they pay for it? And they said, well, the city didn't pay anything. Berkeley paid $0. But the cost of the owner was $14,000 to replace that sewer line. I do not want to see you guys have an unexpected $14,000 charge after the fact because you've got a sewer line that's all kinds of gunked up because it's got roots growing in it and it's got to all be ripped out and then put back in. Number 40, choosing an inexperienced home inspector. Personally, I would not use a home inspector that has done less than 2,000 inspections. And that seems like a high number, but in actuality, that just means that they've been doing this or in the business for at least 5 years. It also means that they're well regarded and booked pretty frequently. In addition to that, I would look for one of the two different credentials that they can get, either a NASHI or a ASHI accredited home inspector. So there's the National Association of Home Inspectors or the American Association of Home Inspectors. Both have minimum requirements for how many inspections they performed in the past, as well as passing additional tests on the information, ensuring that they know more than a typical inspector. It doesn't necessarily ensure you're going to get a great inspector, but it does greatly improve the likelihood of it. Number 41, ignoring seasonal buying advantages. In certain areas of the country, like here in Michigan, there are specific times that you should definitely target to get the best deal. So here in Michigan, it's generally speaking winter or early spring. And this is especially true of lake properties. So lake homes in Michigan, we only get to use them like 4 or 5 months out of the year. So the best time to start looking for them is in the fall, predominantly because two things happen. One, buyers are not looking for lake homes, or at least a significantly lower number of them are looking for lake homes because they know they got to wait 6 or 8 months before they get to use the lake. Number two, the number of lake homes on the market goes up because the sellers got their last hurrah on that lake, right? So that's the time when you've got the highest number of those homes with the lowest number of those buyers. I'm actually looking for a house on a lake myself, and I ended up postponing my look from May to September just for that specific reason. I knew I was going to get a better home at a better price if I just put my home search off for like 3 or 4 months. Number 42, not checking cell phone reception. And I know this one sounds like a little off the wall, but I personally have friends in South Lyon, and it doesn't matter when you're at their house who you're with, AT&T and Verizon and T-Mo. Any of them. Their house is a literal dead zone. So calling them is really difficult and annoying because their phones are always breaking up and they got to keep repeating themselves. It's even hard to send a text if they're not connected to the internet. Thankfully, they have great internet, but every time I get on the phone with them, it's so garbled and I'm just like, man, can you just like walk out of your house and walk down a block or just a little bit? It's actually easier to FaceTime them when they're on Wi-Fi than it is to call them. And that's not a house that I personally would want. Number 43, overlooking rental potential. Okay, kids, listen up. Uncle Mike is going to tell you a bedtime story. Well, actually, it's not a bedtime story. It's just a story. I bought my first property. I'm Uncle Mike, by the way, in this scenario, when I was 20 years old. And it was a condo in Novi, Michigan. It was like $130,000. I'm gonna speak in the third person. That's what we're doing right now. So he specifically bought in Novi because people like that school district and in that condo complex because it allows for rentals. Well, here we are 23 years later. Uncle Mike now owns a paid off condo in Novi worth about $275,000. Even more, I'm clearing $1,700 per month in rent. After paying the association fees and taxes, I'm netting $1,300 a month. That means I'm never gonna have a car payment or an insurance payment again because that cost completely wipes out that other one, which is pretty darn cool. So kids, it's my advice. If it's your first home, my advice is twofold. First, choose an area where you can hold that property for a long time and you're gonna be able to get good renters and be able to get a good rent price. Second, because it's not your forever home, it's just your right now home, Buy that home as fast as possible. Move your timetable up 1, 2, or 3 years, whatever it is. I bought that home when I was 20 years old and I only spent 2 years in the property. I didn't even like the property. I didn't want that property, yet that property has brought me over $140,000 after cost rent profit to me, not including the $145,000 in appreciation. That's a pretty significant number of dollars. Number 44, not knowing what's around the home. So we've had some really hot days this summer here in Michigan, and when things heat up, gases and smells tend to break loose from certain types of properties. And yes, I'm 100% talking about landfills. And there are a couple landfills located here in Southeast Michigan, just like there are in a lot of the metros out there. And there's one neighborhood in specific that comes to mind because I've sold a lot of homes there. I've done a lot of sales there in Northville. I'm not gonna name it, but if you know, you know. So on a good hot day where it reaches 80 or 85 degrees plus, you 100% smell that landfill, because when they construct landfills, they also have to allow for decomposition gases to escape. And where they go? Mainly a couple feet off the ground and then blow right into that neighborhood. It sucks to be outside in that neighborhood in the summer, and I don't want that for anybody. And that's just one example. And of course, you gotta look again at what's around the home. Is it near an industrial complex where there could be some sort of odor or smells coming out of that? Is it very, very, very close to a kitchen, like a restaurant? And then there could be like terrible grease smells coming off the back of that. So I definitely want people to be cognizant as to where exactly the home is located and what's located around it, which frankly, I see a lot of people ignore that. So I always advise my buyers, okay, you like this home, I'm gonna start working on the offer, but here's what I want you to do. I want you to circle around that home a couple of times, a couple wider arcs to figure out what's around it, and do you still wanna be in that home or around that blank. All right, guys, it has been a super wild ride to break down the 44 most common buyer mistakes I've seen over the last 24 years. My name is Mike Perna. If it's your first time here, again, go ahead and hit the subscribe button. We drop videos every single week helping families make moves for good. If you want to, book a time on my calendar so we can talk more specifically about your needs, about your real estate needs and your next move. I don't care when it is. It could be 2 years down the road. You got questions, I want to be of help. Thank you again, everyone, and I will see you on the next video.